Let's take now a deeper dive into market reaction following the Fed decision to hold rates steady, with Fed Chair Jerome Powell saying that the economy has surprised economists of late. Looking at the strong jobs market, he said at a press conference a few minutes ago that despite inflation ticking lower, they are not prepared to take rate hikes off the table just yet.
While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective.
Let's bring in now Vance Howard, the CEO and CIO of Howard Capital Management. Vance, it's good to see you. Investors like what they hear, Vance. I see green all over my screen. The Dow's up right now 430 points. The S&P 500 up about 1.1%. Let's get your response and reaction to the Fed today.
But we're very encouraged. I think this is only the second time he's got in front of the podium in 2.5 years where he didn't tank the market. So this is really good news for everybody. I think what he was saying too is that clearly the rate hikes are done. He's done with rate hikes. He's looking at how he's going to cut. And you talk about May or June. We're looking at he could potentially start cutting as early as May or June. And I think that's the probability. The 20-year Treasuries have responded incredibly well to the news, especially over the past 30 days. It sort of was, we started buying Treasuries about 30 days ago, which is the first time we've owned long bonds in over 2 years. So, it's been a really fun rally today. I hope it continues.
Vance, what would have to happen for them to cut in May or June?
Well, I think you got to remember what caused inflation. It was supply chain issues. Well, they're starting to catch up now. So now you've got an organic situation where interest rates are dropping a little bit organically. But he's got to be really careful here, because if he keeps rates too high for too long, he could throw us into a recession. I think that's what he's more worried about right now. And I think that's what he was trying to convey in front of the podium today. And I think he did a pretty good job of it.
And so, Vance, what is your take as we roll into 2024 on the economy? We've got some different interesting perspectives on the show today, different economists, some perhaps a little more cautious, some firmly in the soft landing camp. Where are you?
I'm firmly in the soft landing camp. The trend is bullish. The trend is up. I think all pullbacks are viable now. I think that the headwinds are kind of out of our way now that rates have stabilized. They've probably peaked. You had your guest on a minute ago was talking about reversion to the mean. Exactly what's happening with the 20-year Treasuries, exactly what's happening with small caps. Look at biotech. We're talking about massive trades over the past 3 or 4 weeks where they're reverting back to the mean. You had the fantastic 7 and the fabulous 7. They've been carrying the market. But over the past 30 days, this market is starting to spread out. And that's incredibly encouraging for a new bull market. And the amount of cash on the sidelines is just amazing. So if he starts to drop rates, we could see that cash flooding back into the market, pushing it higher and higher in 2024.
Vance, I'm a cynic by nature, so whenever anybody gets too excited or too depressed, I'm forced to push on the alternative. What could go wrong? Everybody seems really psyched today. What could go wrong?
I think geopolitical risk could go wrong. I think that's one of the biggest risks or headwinds that we have in 2024, is something that we can't see or predict, whether it's Russia or whether it's China. I think that's the big risk that 2024 holds for us. As far as the economy goes, the economy's doing well. Employment's good. Inflation's starting to drop. Powell's made some wonderful statements. Geopolitical risk, that's where we see it.
And Vance, listen, you're not just a CEO, you're a CIO. It means you have to decide where to put money to work. As we head into 2024, Vance, you look at the equity market, strong rally already. What sectors do you like here, Vance? What are the kind of companies you're screening for?
Well, we trade the HCM pivot points, and that's where we see the turn in the market. So we started buying small caps again about 3 or 4 weeks ago. If you don't want to buy the small caps, you can go to VBK, which is Vanguard Small Cap Growth, or if you want it enhanced, you can go to Directions TNA. If you want to look at an enhanced Russell 2000 top small cap growth. Small cap growth we think is going to do well. We think tech's going to continue to do well. We love the semiconductors because they're coming out with the most interesting and innovative products as far as AI is concerned. So you look at NVIDIA, but if you don't want to own the individual stocks, own SOXX, which is the ETF of the semis.
Vance, are there parts of the market that you think are going to underperform in this kind of environment that you want to avoid?
I'm not real bullish on oil and gas, to be quite honest. I think you should stay away from oil and gas. They're a tricky trade anyway, man. They can really, they can move in all kinds of directions that are unpredictable.
As a Texan, are you allowed to not want to invest in oil and gas, Vance?
I love oil and gas. It's just a tough trade. I think right now an easier trade is tech, just technology. They're winning, and it continued to win.
Fair enough. And you got plenty of that in Texas, too. Vance Howard, thanks so much. Appreciate it.
Thank you.